Okay, we have Varinder here in the crowd. Yes, Varinder, please.
Hello. Yeah. I can't resist my temptation of asking Mr. Damani this thing. And a very simple question, sir. What is the mantra, for investing? What have life taught you? And what can we all take from your experience?
Thank you, Virendra. Thank you for having me out here. I think a lot of people can be successful picking stocks, and the biggest mistake I've publicly acknowledged in my career has been the inability to write big. When you have only so few great ideas in your life, and when you have one of those great ideas, you really want to make it count. As Buffett says, back up the truck. So the advice I give to young people, yes, do your research, get your stocks right. But when you have a great idea, you need to back up the truck and buy.
Well, that's very thoughtful advice from you, sir. Thank you. I'll come back with more.
No, but give us one great idea, Mr. Damani.
I think it's United Spirits. I remember, he telling us long back.
There have been many. I mean, this market has gone from index of 800 to 30,000 almost. So there have been tons of hundreds of baggers that all of us have seen in our careers. So, and there'll be more. The good news is there'll be a lot more coming over the next few years. So, but the key thing to remember, to be filthy rich, is you remember to back up the truck.
Okay, Ramesh, is that, is there a bit of a personal experience here? Because United Spirits, I remember you identified at what, 50 crore market cap?
I don't want to talk about the personal. This is a personal lesson. He asked me the personal drawback of my career, and I would say that was the biggest drawback of my career. The way to get rich is to buy lots of big blocks of stocks and hoard them, like some successors, like Buffett does, for example. So a lot of us get good stocks right, but the ability to sit tight and ride them on a big position is a skill set that the next generation also needs to learn.
So my last question, sir, what is the mistake any investor should not do? From your, whatever you have learned.
I mean, first, not write big, but the second, the most important lesson that it liberated me when I learned it is the power of compounding. If you double your money every 3 years, you can start with 10 lakhs and end up with 25 crores. It's that simple. So why go through all this nonsense of tips and inside information and so many other things that, we get tempted by, when you can start with 10 lakh rupees and you're 25, as Ridham said, and by the time you're 50, 30 years later, you're at 25 crores. That's $4 million US. That's rich anywhere in the world.
Okay,
compounding is the word.
Yes, compounding. That's of course Ramesh.
Something, Ramesh. It doesn't feel that way when you're a mutual fund investor. Now, I don't know. I can't remember since when I've been investing. But if you look at a rolling 1-year basis, median earnings, it usually looks like 7-8%. It looks very much like that. This compounding. There are long periods when doubling your money in 3 years doesn't work. So, Madhu, what is your advice to people who may have probably come in 2007 and looked at it in 2008, 2009, 2010? Where is the doubling? The capital is lost. How will you advise them?
That's what now. Convenient. You can choose a convenient point that, you have not made money if you came in 2007. I will choose a convenient time that if you came in 2002, you have made enormous wealth.
Yeah, but how do you reach out to investors? Because there are vast hordes who, probably shy away because of this experience that they have waited it out. Probably it was an unfortunate choice for them. And, it is usually not unfortunate. It is usually sequenced that way. It is only when markets are at all-time highs that mutual funds, investors, media, everyone are talking about stocks. White papers talk about stocks. So you often are in a situation where hitherto non-investors come into investment at that time. So what's your advice to investors?
So that's what Lata is. I think at least we have been very consistent, and I have been interacting with your channel for last 10 years. Whenever there is a panic, you call us and we say that this is the time to buy. We are not advocating people that, when there is a euphoria. See, we always have been saying this. Either you get good news or you get good price. If the news is fantastic, conversely, there has to be something wrong with the price. And if the price is fantastic, the news will be bad. So I am saying you have to just consist. It's just a sheer bad luck that you first time invested in 2007. It's just a sheer bad luck that,
You hear about mutual funds and investments only at such times.
No, but that is why this mutual fund day, that's why Sandeep's biggest idea that it should not be an event of a 9,000 Nifty. It is to be a consistent, every 7th you say, for the next 25 years, I am going to invest, I have faith in India, I have faith in Reliance Mutual Fund, and I have faith in HDFC. So these are people who will make enormous amount of wealth. So it is to be a habit. You cannot just casually treat this. It's a serious subject we are talking about. Making money is not non-serious, not like watching a movie. It's not like whenever you decide that you will come in, whenever you will decide you will go out. So I am saying you have to have some conviction. And the conviction which I am imparting is that you have to be consistent. If you are an SIP investor, don't worry about what has happened in the market. You come, every month you put money, over a period of time you will realize that the returns are better than what you expected.
Okay. Raamdeo, so is this a roaring bull market now? Every correction is getting lapped. I was having a conversation with Ridham. I said, is 50,000 likely? He asked me, are you talking Sensex or Nifty? So from here on...
Combined.
Or combined, wow. So, I mean, what are we talking about in terms of a bull market? Do you see much higher all-time highs now from here on?
Sincerely, it is very difficult to say that markets are headed very high. I mean, it surprises me every point of time whenever we try to figure out where the market is headed. It's much easier to figure out. I mean, that's my personal style. I'm continuously looking for ideas, and I keep trying to look for an idea which is a compounder. See, what is going to compound? Underlying business, does it have an opportunity to compound 10x in next 10 years? Does it have a management which can kind of hold that kind of compounding? Can it provide that particular kind of management as well? Whenever I find compounding, and I have seen you get compounding ideas in good time as well as bad time. Because these companies, they come at their own pace. They're not waiting for the market to go high to get born. These are all business cycles. So I think bothering about a bull run or mega bull run, which were used to 92, 2000, 85, 92, 2000, 2007. So I've seen 4 of them. And a lot of money is made at this point of time. But a lot of, as you were saying, that 2007 people who come in, a lot of people have bad experience because ultimately they get in at the right close to the peak of the market. So better that the bull market, like this kind of mad bull market, doesn't come. We have a nice warm market, what we have today, and let the market move 12%, 13%, some correction, again moves 15, 20%. I think that's much better for the economy, for the investors, for everybody. But the nature of the thing is very different. It will happen, and it will be much bigger. This time, whenever it happens, maybe 6 months, 2 years, 3 years, it will be much bigger.
Can I just add? The opportunities are there in every market. So we talked about 2007. Just in a hindsight, that in 2007, at the peak of the bull market, the total market cap of the pharma sector put together was 1 lakh crore. And at that time, DLF's market cap was 1.5 lakh crores. Okay. 8 years down the line, the total market cap of pharma industry was nearly 10 lakh crores, and DLF's market cap has fallen to 25 or 30,000 crores. So I'm saying if we just have conviction in this, that we will find ideas in every kind of market. So we don't have to really wait for a real 50,000 Nifty for us to make money.
Well, we have a lot of more questions which we will reserve for the mutual fund managers who are going to join us. But what the hell, it's a Friday evening.
It's a Friday evening, yes.
Yeah, so we have to have a rapid fire round.
Yeah, before you go to rapid fire, actually, Lata, there's a question which only I can answer. So you have to ask me that question because all the other people have vested
I've heard of people leaking the question paper. I've not heard of people setting the question paper and answering it.
This is a question which everybody in this audience has. And I'm surprised it's not coming up because it comes up to me. So the question is, and people are asking this question, and this has reference to a few statements that Warren Buffett made recently and Charlie Munger has been making for 23 years, that don't bother with active fund managers, go index investing. So a lot of people ask me this, that should we also do this in India? And my very firm answer is no. Don't do index investing, back active managers. because in India we still have a bunch of inefficiencies in the market. This is the 50s and 60s and 70s in the US, not the 90s and 2000s. So that moment will come, maybe 10 years, 15 years, I don't know when you have to abandon active managers and go to index investing. But my confidence is that the bunch of active managers we have today are capable of delivering better than market returns over the next few years. So I think it's a very important thing, because a lot of investors are asking this question, and I think Sandeep referred to ETF growth. And I'm actually disappointed that ETFs are growing, because I think that's a missed opportunity for retail investors. They should actually be backing active investing.
It's a great answer. It's a great answer, but then you've taken away my question for the next set of fund managers, yaar. This was my question.
And you know what,
they have vested interest. So they will obviously answer in favor of active management, and then so I think I have a slightly more credibility. They are all my clients. So again, people will question.
There is no vested interest.
Yeah, but I'm not backing any specific individual here. I'm just making a general comment, and it's a genuine comment I'm making. I think there is still some active alpha to be extracted out of India, which a professional set of manager can do for you.
Okay, Ridham. Thankfully, our industry does not pay as much as yours, because otherwise you would have taken our job away. You know, you're I think the best business anchor that we could find. Okay.